I have some good news and I have some bad news. The bad news first. I blew up my small account, and this is not a good situation. I'm not happy about it. But as you guys know, I've turned an account with less than $600 into more than 10 million in verified and independently audited trading profits. And I like periodically doing small account challenges because they are a challenge. And for me, I find that fun. And I know you guys like watching it, but we know that they're risky. And in this episode, during this challenge, I blew up the account. Okay, but here is the silver lining. And this is the good news. I now have the very real opportunity to share with you how I'm gonna rebuild, how I'm gonna bounce back, because I know many of you have been in this exact same position. Now, it doesn't matter if you're trading Forex, cryptocurrency, you're trading futures, or you're trading stock. Many of you have been in a situation where you have a relatively small account and you blow it up, or you knock the account in half, and you now are faced with two really big tasks. One, how to recover emotionally from that big loss. And then two, how to rebuild the account given that you now have a fraction of the buying power you previously had. So now the growth is gonna be smaller. In this class, we're gonna do a couple things. Number one, I'm gonna share with you how I blew up my account so you can avoid, hopefully, making a similar mistake. Number two, I'm gonna share with you the strategy I'll be following to help myself regain my composure emotionally so I can focus on rebuilding this account. These are steps that you can implement in your own trading as well. And number three, I'm gonna share with you my tiny small account strategy that I will be following over the next several days as I rebuild the account. And what you're gonna get to watch is me grow the account from a cushion of just about $14 above the minimum deposit threshold that this broker requires to over $4,000. That is gonna happen in today's episode, so let's go ahead and jump right in. So I now have $514.22 left in the account. The broker that I set up this account with has a minimum deposit of $500, which means I have $14.22 over the minimum. I made a terrible mistake. And how did this even happen? So for those of you who have been tuning into this small account challenge, you'll know that when I began the challenge, I started with an old laptop with 3 broken keys and an external monitor that was broken. And I did that to kind of simulate what it's like as a beginner working with sort of a hodgepodge of older equipment. And I said, every time we cross over 10,000 thumbs up, 10,000 new subscribers, you guys are gonna help me unlock new inventory, just to make it kind of fun. So thank you, by the way, for those of you who have already hit the thumbs up and subscribed in this episode here. Nonetheless, over the last week, we crossed over 10,000 thumbs up and I unlocked a new computer. So I was like, sweet, I'm gonna put the new computer here. I'm gonna get it set up. This is gonna be great, big improvement. It's a new computer. And what happened was I installed the trading platform on my computer right here, as you can see. And when I loaded the layout, what I didn't realize was that it didn't load my hotkeys with it. So hotkeys are something that active traders use to get in and out of trades just by pressing buttons. So all we have to do, it's incredibly streamlined. We can type in a stock, whatever the stock is. We type in the stock and we could just press Shift-1 and it's going to enter the order right here automatically for the most shares that we could afford to buy. So that's what I ended up doing. I saw a stock pop up, I pressed Shift-1, but my order executed and sent to the market. It didn't preload it the way it is right here. It just sent an order straight to the market. And I was like a deer in the headlights. I was like, what happened? That's not how my hotkey was set up though. Well, that is how the hotkey was set up because it didn't copy over my hotkey settings. So under my hotkey settings right here, if I go down, or we could sort these are all the different keys that I use. This hotkey right here is to buy with 95% of my buying power. And the key is set to load right now. However, what it was set for was load and send. It's that big of a difference between, instead of saying load, it said load and send. It's such a small little thing, but I pressed that button. I sent an order out to the market using 95% of my buying power for a stock that I didn't want to buy at that moment. I pressed the button just to see how many shares I could afford to buy. I do that all the time. It's a way for me to assess, can I buy enough shares that it's even really worth trading? So when I pull up Reddit, I could see, well, I could only buy 48 shares. Yeah, no, that's probably not worth it. Whereas I pull up a cheaper stock and I say, oh yeah, okay, that I could buy a lot of shares of this. This is something that is worth trading. Now, for me, that factors into my strategy. So if I know right away I can only buy 50 or 100 shares of something, it's not going to be worth it for me to try to take that trade because I'm focusing on relatively small base hits. That's part of my strategy. Try to lock up 10, 15, 20 cents per share. So with 1,000 shares, that's 150, 200 bucks. With 10,000 shares, it's $1,000 to $2,000, which is a lot, but more risk than I'm willing to take right now. With small size of like 100 shares, it just $15, $20, it's not enough to move the needle for me, especially when you factor in the reality that the broker that I'm using still charges a commission for every trade I take. Okay. So what ended up happening was I pressed that button and I was just sort of looking at a stock and considering, is this something I should even trade? And all of a sudden I'm in and it just happened to be dropping. And then all of a sudden it's dropping more and more and more. And I have to sell. I have to panic sell. I for a second, I wasn't even sure if I should just hold it and see it through. I was like, whoa, I'm in a huge position here. I wasn't planning on that. But if I sell now, I'm already going to take a huge loss. So let me give it a second. And then it just kept going lower. Okay, so look, that was, I would say it's a technical error. It's almost the equivalent of losing money because you're in a trade and then internet goes out and by the time it comes back up, the position has changed. These things happen and it happened to me. Okay, so, well, let's face reality. I've now taken a big loss and I've got to recover. So this is something that I am very familiar with because this is part of trading. Being a trader requires you to be incredibly resilient. You've got to be able to get back on the horse after getting knocked down. And that's what will ultimately define you as a trader. Some traders in the face of this kind of moment will give up. They'll be like, oh God, I'm never trading again. That was too painful. I can't go through this again. And others will say, okay, yeah, did that suck? It did. Was that fun? No, I would like to not do that again. But having said that, the only path forward is through because I love trading. I want to make this happen. I see the potential in this career and I can sort of exclude the anomalies from the way I think about trading. Yeah, things like that'll happen, but they're rare. It's few and far between. So I'm just going to stay focused on following the rules of my strategy. So now what I want to do is I want to share with you the strategy that you're going to watch me trade over the next 7 days, which will all be chronicled in this episode right here. I'm going to break it down for you so you can implement this strategy in your own trading. What I encourage you to do is download the PDF that has the checklist and the breakdown in written form of the strategy that I'm going to be using and sharing with you now. So it's pinned to the top of the comments and in the description. So make sure you check that out. Okay, so how do I recover? I've just taken a huge loss. This is an example of a period where I had, a green week, another green week, and then all of a sudden I have a week where I'm red 5 days in a row. 1, 2, 3, 4, 5 days in a row. And that's with my big account. So you know what? This happens. Most likely the market got cold and I didn't really ease off the throttle fast enough. I dug myself a hole at $22,000. But as you could see, I recovered relatively quickly. Had a couple more small green days before things started to pick back up and improve. Actually recovered it all within 1 week. And then by the end of that next week, I was making new progress. So I want to give you my game plan following a spiral event. A spiral event is, like basically either what just happened where you have a freak accident and you have a huge loss, or what's worse, a spiral event could be where you become emotionally hijacked and you take trade after trade after trade after trade and you just lose. Gamblers would say this is going on tilt. This is where you are just emotionally compromised and you're trading anyways. And at that point, you really are kind of just gambling because you're trading from emotion, fear, the fear of having a loss. Because here's something that happens in our brain. We feel like on a day that we're red, we're already red, so I'm going to feel terrible no matter what. So what's the difference between being red 1,000 and being red 10,000? Both are red, right? And that's a very primitive, emotional type of logic that's not really set in reality, because in reality, there's a huge difference between being read 1,000 and being read 10,000, a $9,000 difference. But from an emotional perspective, when we're thinking and acting on our emotions, being read, either way, you feel like a loser. Whether you're read 20 bucks or you're read 200 or you're read 2,000 or 20,000. If you're read, you're a loser. And that's how a lot of us feel, because this is competitive and it is sort of like a game. And each day you either win or you lose. And when you lose, some emotions can come out. So a spiral could be a day where, you started with one loss and then you got a second loss and then a third and then another, and you just dug the hole deeper and deeper. And what usually happens to traders when they're experiencing that type of spiral is the losses are getting increasingly big. So usually it'll be something a little bit more like the first loss might be like 300. Second loss is like 600, third loss is like 900, and then the fourth loss, you're now read $5,000-$6,000. And that's what we call that kind of spiraling. The loss is just getting bigger and bigger, and the emotions are getting bigger and bigger. Okay, so following a spiral event, or following an event where, for whatever reason, you just had a huge loss. You lost internet, you got caught in a stock that had bad news, you pressed the wrong hotkey, as was the case with me. You had a mishap. And now the loss is so big that you pretty much are guaranteed to feel an emotional response. Once that emotion starts to kick in, it's going to affect your thought process, and it's going to affect you for days. So this is the game plan following a spiral. Number one, I have to acknowledge that I am in a heightened emotional state, and I have to apply restrictions to my trading account so I do not allow myself to continue the spiral. Right? After you've had one day of spiraling, you don't want to continue it to day 2, day 3, day 4, day 5, and just have the loss get exponentially bigger. So by acknowledging I'm in a heightened emotional state, what that essentially means is I put awareness around the fact that I'm stressed. I'm feeling a stress response because of trading not going so well right now. Number 2, applying the restriction on my trading account is a technique I use to stop the bleeding. I do not want to keep having the loss get bigger and bigger and bigger. So I need to stop the bleeding. And the easiest way to do that is to apply a restriction to my account, and the restriction's in the form of a max position size. So what I'll typically do is I'll say, well, for the next 5 days, I'm going to set a max share size on my account of, just for instance, I might use 5,000 shares. Knowing that my max size typically is closer to 30,000, I'm reducing my size considerably, to the point where even if I do have a few more losses at the rate of 5,000 shares a trade, the losses are going to be negligible compared to trading with this size. So the emotional response will also be smaller. I have to bring everything down a little bit. Now, obviously, what I would like to have happen is I would like to, have after the drawdown, however big it is, I'd like to have, of course, you'd like to just bounce right back like that. But if you try to do that, you're increasing the likelihood that you're going to go like that. So you have to accept that that's not going to happen. You're not going to recover all of this overnight. Instead, you need to activate your patience. Control P, patience. I wish it was a button you could press on the keyboard and you would have it. But you need to activate patience and be patient with the fact that it's going to be a little while before you get back to here. Patience is something that requires a lot of discipline to be able to sit with. Being patient with the drawdown, being patient with the loss. Okay, I've had a loss. It's a big one. It's going to take some time to recover. That requires a high level of patience and a high level of acceptance. I'm not going to feel like a winner until I'm back to all-time highs, but this is just the way it is. I have to tolerate it. So during this period, this is where I'm trading with share size restrictions. So I've got my share size restricted. I'm also restricting the amount of times I'm trading each day, and I'm going to slowly rebuild my account. Now, my rule of thumb is that once I've made back about 50% of my loss, and this is when I start taking the restrictions off so I can start to make a little bit more progress. Now, at this point, even if I do have a little bit of a setback, I'm well off of my lows. So the setback hopefully won't bring me all the way back down to here. That's what you want to avoid. There's something called stair stepping down, which is when you make progress like this, you're stair stepping up, and then you're having the stair stepping down. And you don't want to do that as a trader. Yes, you're going to have some losses like this, but you want to pretty much cap it right there and start the process of being very cautious and making your way back up. So when we're trading with small share size, yes, it does limit your upside potential, but what's more important is that you're capping your downside loss. You don't want to keep drawing down. So you start building a little bit of progress. And then again, once you've made back 50%, you start to increase your share size, increase the number of trades, and you grow from there. So all of that is easier said than done. All right. So number one, I acknowledge I'm in a heightened emotional state. Number two, I apply restrictions on my trading account. Number three, I begin the practice of mindfulness and meditation to reconnect with discipline. So one of the things that I love doing, well, I don't love doing it, but I'll do it when I'm in the situation of needing it, is I'll do guided meditation. So I'll do it on my phone, and I'll set aside a little bit of time each day, usually in the evening, to do a guided meditation, and I'll do it before I begin trading each morning. And you could do a guided meditation on some of the different emotions that you feel around the loss. So if you feel anger, you could do a guided meditation on dealing with anger management. If you're feeling sad, you could do one on sadness. If you're feeling anxious. If you're feeling FOMO, you could do one on FOMO. Or on patience or on discipline. You could do guided meditations based on different things, and I find them to be really helpful. Now, it's kind of silly in a way that just listening to, this kind of guided meditation could have a significant effect on your thinking, but what it gives me is perspective. Because what I find is that in these moments where I take, a really big loss, whatever happens, I take a huge loss, I feel like I'm in a state of sort of tunnel vision where I'm so upset about today. Everything is focused on today. And I feel angry. I feel frustrated. I've got all those feelings. I feel it's like that buzzing feeling. It's just a real sense of anger and frustration, but so focused on the fact that I'm red today, that today was a bad day. And when I step back, and it's very hard to do in the moment because the emotion takes you over to just feeling, I'm so angry about what just happened. I can't believe that just happened. I'm so stupid. This is unbelievable. Whatever you say. Being able to step back is very hard in that moment, but I find it to be really helpful. So stepping back and saying, okay, yes, it's true that I just had this loss right here. This is the tunnel vision right here. But what is also true? So sometimes that's the question I'll ask. What is also true? What's also true is that I grew the account from back here. Okay, that's also true. I had a really nice run of progress. What's also true? Well, in the case, for those of you who've been practicing in a simulator, you might have 4 or 5 months of progress. And I'm sure you had some blips here, a little drawdown and then a recovery, whatever. It won't be perfectly straight. It'll be a little deviated, but this is the track record that you look back on. And so when you have this loss right here, instead of being focused only on this, like this is the only thing that's ever happened in your life when it comes to trading, you step back and say, well, this is what's happened here. Realistically, I only gave back a week of progress, maybe 2 weeks. Does it make it more fun? No, but it gives you context. It gives you perspective. And in fact, when we look at this over the last 90 days, well, geez, I'm still net positive over 90. You look at this over the last year, well, gosh, I'm definitely doing the right thing. Okay, so this was a mistake, and it's not, I don't do this to try to let myself off the hook for making a mistake. I still made a mistake and need to hold myself accountable if that's the case. Now, to be honest, with this mistake that I just had, I don't really feel that I need to beat myself up about it too much. It just happened. Things happen. So with this one, it's fine. But there are other times where I'll make a mistake and I'll really feel like I had a very clear opportunity to make a better decision and I made the wrong decision. Now we're all human, right? So of course we're trading against some computer algorithms, which gives them an advantage, but we're human and we will make these mistakes. So we have to let ourselves off the hook for that. Okay, so focusing on the mindfulness and meditation to reconnect with discipline is important. And then when I sit down each morning, right? So, and I'm going to show you in my next trade, I'm going to sit down, I'm going to focus on building a cushion with small size. I'm going to get green and get out. I've got to start rebuilding track record. I've got to start rebuilding confidence. And my first goal is to try to produce 1 week of stable trading results to rebuild the confidence. Once I've recouped about half of the drawdown, I can begin removing my restrictions. So this is my general, the general strategy that I follow for recovering from a spiral. But now we have to talk a little bit about the strategy. And before we do that, let's go ahead and jump in to the first trade that I've taken in this now very tiny account. Okay, TGL just hit the scanners. It has breaking news, and I jumped in with the most shares I could afford, which was 72. I bought 72 shares at $6. It's now at $6.36 on the offer, $6.29 on the offer, $6.18, $6.36, $6.40, $6.60, $6.68, $6.66 on the offer, $6.50 on the bid. I'm up $35, $6.70, $6.83, $6.86 on the bid. Can't really complain too much about that. The stock's now up 32%. So this is a stock that had news that came out right at 8 a.m. That created a 20% squeeze in the stock. Now, I locked up $50.40 a share. As you can see, as I was sitting down, my account balance, the equity, just $514.22, which gave me about $3,300 of buying power using leverage, which is not available on every stock. And with that, I was only able to afford 70 shares of TGL. I bought 70 shares and I locked up $50. Okay, the process of rebuilding has begun with the first trade. Now, I'll mention that on that first trade, I took 72 shares because that was the most I could afford. It's not what I would have liked, but I thought the stock had potential, and it's because of the way it fit within my strategy. The thing is, you have to be able to make a very quick decision, and I actually punched the buy button on that. I mean, it was almost instantaneous. If it had come up and said I could afford 500 shares, then I would have taken that trade. Now, TGL, the stock that I traded on day one on that first trade, was moving according to my strategy. Okay, so step one of the strategy is to find a stock that is moving. And I do that by using this scanner right here, which is searching for the biggest percentage gainers in the market. And this is showing at this moment that 225% was the biggest percentage gainer. It was this stock right here, NBTX, priced at $6.60 with 39 million shares of volume and a float of 34 million shares. We'll talk about float a little bit more in just a second. It has a relative volume of 7,342. So this is a stock that I would definitely want to look at and see what's going on with it. We look at the chart and we can see, whoa, okay, this thing went from 2 all the way up to 7. It pulled back and then it climbed all the way back up here to 8. This has a lot of range. So most likely what was driving this move was a catalyst. There was some type of catalyst, particularly news. So in the case of TGL, when TGL first hit my scanner, I was evaluating the stock based on these 5 criteria. Number 1, I wanted to see how high the relative volume is. Relative volume is the measure of today's volume relative to average volume that the stock experiences. So if the stock typically experiences 100,000 shares of volume over a 30-day average, and today it has 500,000 shares of volume, it's got 5 times relative volume. I set 5 as my minimum criteria. Now, if we look back at this scan here just for a moment, you'll see no doubt NBTX was way, way, way over. Now, 5 is like, super low, but you'll see that this one's 4.19, this is 4.24. A couple of these are just over 5, and then this one's 433. This one's 11 and 12, and then this one's 7,000. This is the big stock that I wanted to be focused on this particular day, because this is just so special what's going on with it. So high relative volume means you've got lots of volume relative to what's normal. That typically is because there's some type of catalyst, and these are stocks that make big moves. Number two, the stock has to already be up 10% on the day. It's possible you could have a stock that has high relative volume, but is actually selling off because they've got bad news, and I wouldn't be interested in trading that. So I only want to be trading stocks that are up, and I set a minimum threshold of 10% on the day. Number three, there should be a news event moving the stock higher. That's the catalyst. That's the reason the stock is going up. So I'll talk more about that in just a moment. Number four, most traders prefer stocks between $1 and $20 because they're affordable. Most traders with small accounts, well, we want to trade what we can afford. So back to the whiteboard here, with my $500 account, give or take, and my $3,000 of buying power, if a stock comes up, let's just say at $6 a share, I could buy 500 shares of it as long as the stock is offering leverage, which most of them do, but not always. And just like that, let's just say I get in at 6, it squeezes up to 620. I'm up times 500. I'm up $100 on that trade. That's $100 of profit for me. Okay, and that means my account is now up like 20% on the day, right? These are big moves. This is what I'm going to need. I'm going to need to find stocks where I can get 20 cents, a share, and where I can do that using all of my available buying power. In the case of the first trade on TGL, I bought 72 shares because that was all I could afford. And even though I made, $50 out of it, that's going to be less common to get that kind of big move. So I have to be able to focus on stocks where I can afford to buy as many shares as I can because my focus is on the number of cents per share that I can make. Number five, most of the stocks I'm trading are going to have a float, number of shares available to trade, of less than 10 million shares. This is going to make the stock more volatile. It's going to amplify how much it can move. And to give you kind of a better understanding of how this works, let's say, for instance, we have a stock that's priced at $8 a share, and it has a float of, let's just say, 5 million shares. So there's 5 million shares available to trade. The stock squeezes up, let's just say, 50% on 5 million shares of volume. Okay, so these are the metrics of the stock. Let's say, for instance, another stock came up with 8 million, priced at $8 with a 1 million share float. I would wager that this stock could make that same move with just 1 million shares of volume because of the supply-demand ratio. Because the number of shares available in the float is the supply. So this is supply. And the number of shares traded here is the demand. Now, what we know is that stocks that have lower floats will have a bigger extreme in the ratio between supply and demand on days when we're having a really big move. So when we look back at NBTX, this had 39 million shares of volume and a 34 million share float. If this had a float of 3.5 million shares, it wouldn't shock me if this had gone up like 2,000% in one day. And we have seen stocks do exactly that. We have seen 2,000, 3,000, 4,000% moves in a single day. And whenever it happens, it's because there was a massive imbalance between supply and demand. So finding the right stocks to trade is going to be critical. When you have a small account, you have zero cushion. You can't afford to take risk. So higher price stocks, you have to be very careful on it. Stocks with higher floats have to be very careful on it. Stocks need to really fit within my parameters in order for me to be interested in trading them. So let's take a look now at trade number 2 here for day 1. Okay, so on trade number 2, SGD is on the scanners. It's up 54% on 1 million shares of volume, priced at about $1 a share. A little on the cheaper side, not my favorite price range, but I can afford to buy more shares of this. I punch the order and get filled 490 shares at $1.06. We now see $1.11, $1.14, $1.24 for a moment. And I lock it up. I take the profit off the table. Unfortunately, I got filled on the sell side at only $1.14. You saw maybe how it dropped just for a moment there before popping back up. And I just had the bad luck of getting filled just sort of where it dropped. That could have been, well, a little bit closer potentially to $100 of profit, but nonetheless, $39.20. I'll take it. Is it a huge winner? No. But now the account's up $89.60 here on day 2 with $514.22 of equity. So I'm making some progress, and that's what's important. Step 2 is trying to figure out what the catalyst is that's driving the stock higher. So once I find a stock on my scanner, I might like it from a technical perspective. I like the percentage change. I like the price. I like the volume. I like the float. I like the relative daily volume. All of that stuff looks great. And I might even look at the chart and I'm like, the chart looks pretty good too. But I still like to understand what the catalyst is, what the news is that's driving the stock. So I use this news window right here, which is part of the Day Trade Dash platform, which you're seeing. This is a platform that I've built out. I have a development team that built this out for me. It's available for members at Warrior Trading exclusively. And so I search right here in the newsroom to see what the news is. I try to understand what's the headline that's driving the stock higher. Now, there's different types of news catalysts that we see on pretty much a daily basis. We see earnings, we see clinical trial results, FDA approvals, new contracts. There are companies putting out headlines every day. I mean, there are some companies literally that put out a headline every single day. They are desperate to stay relevant. And these are generally ignored. Nobody really cares about them. Maybe initially they did, and then they kind of start ignoring them. So I don't search for and try to read every news headline that's coming out. That would be impossible. It wouldn't even make sense to try to do it. Instead, I focus on the stocks that are already moving. Once a stock is moving, then I try to figure out why it's moving. That's my workflow. That's always been the process. You literally couldn't do it the other way. It would be insane. So finding the needle in the haystack, you use tool. So you use, I don't know, like a magnet, boom, you got the needle just like that. So with the scanners, I'm searching for the stocks that are moving, and then I see what's the catalyst, why is it moving, and then from there, I'm taking the trade. So, however, there are multiplying factors in headlines. So we'll sometimes have a headline that includes hot keywords of a current trend, maybe AI or COVID. This is very common. Or we'll have a stock that'll fit within a hot sector. Right now, pharmaceutical stocks are very high, but sometimes we get very hot. Sometimes we'll get Chinese stocks or AI stocks that are sort of trending. Another multiplying factor is if the stock is a recent IPO, a recent special acquisition company, or it's had a recent reverse split. I find that these are all companies that these are sort of stock types, a recent IPO, a recent special acquisition company, or a recent reverse split, where in the past we've seen some huge moves. So because it's happened in the past, I pay really close attention to that moving forward. So once I pull up a stock and I see it has news, then I'm looking at the chart, and that's where we start talking about entries. So now let's look at the third trade from day 1. On my third trade, the stock pops up on my scanner, DDI, and I can see it right down here on the scan. It's up 41% on the day right here. It's got very light volume, but it also has a very low float. So when I saw it popping up, I thought to myself, this looks a lot like a stock I recently saw that went from $8 all the way up to $24 a share and did it in like 10 minutes. It was an incredible move. It was light volume and it started just creeping higher and higher and higher. So on this one, I punched my order for 150 shares. At the time when I did that, I actually was getting filled between the spread, which surprised me. The offer was $14.89, and then it jumped up to over $16. But I punched it. I got filled at $14.89. It goes up to 16. It hits a high of just about almost 17. And then all of a sudden, I'm at 16.56. I put my order on the offer, and I filled on the ask, selling 150 shares. It's not a huge position, but in this case, I got $250.50 of profit, which means day 1 here, now my account is up $360.10. This is a really great recovery. But let's get into a little bit more detail talking about entries, because I think in order to take the best trades, in order to trade the strongest setups, the strongest stocks, you need to know where to buy and where to sell. So let's jump back in and get into the chart of entries and exits. So traditionally, when we start talking about entries and exits, we start talking more about risk management. However, I would argue that proper stock selection is probably the best thing you can do to mitigate your risk. Because if you're trading the best quality setups, if you're trading stocks that have a really strong catalyst, these are stocks that are going to keep going higher. And the individual entries, well, they're not going to matter as much. If you're trading the worst stock in the world, an entry, it's not going to make up for that. You're still going to lose money. So we want to find the right stocks, and that's going to be our best method of managing risk. Having said that, it is important to understand the relationship between your average winners and your average losers. And so we're going to talk about that as a form of risk management. I like to think of trading as, whenever I'm looking at a trade, it has to have the potential to be able to double whatever risk I'm taking. So if I'm going to risk, let's just say $100 on a trade, I want the potential to make $200. That's called a 2-to-1 profit to loss ratio. So whatever the profit is, the risk should be half, or whatever the risk is, the profit should be double. Either way, it's the same ratio of 2-to-1 profit to loss. And the fact is, if you actually traded with a perfect 2-to-1 profit loss ratio, your break-even point is only 33%. That is setting the bar so low, it makes it much easier and much more likely that you'll be a profitable trader. However, many beginner traders, and I was no exception when I was getting started, actually trade with an inverse profit loss ratio, where our average winners are smaller than our average losers. So for me, my average losers were about 25 cents a share, and my average winners were only about 12 cents a share. Well, it doesn't take a rocket scientist to realize that you're not going to be profitable with that kind of inverted profit to loss ratio unless you're right like 80% of the time. In fact, what the statistics tell us is that you would have to be right, well, 67% of the time just to break even, and that would be before any fees and commissions. As I mentioned, the small account that I'm using charges fees and commissions, so that is going to set your break-even point just a little bit higher. Okay, so that means when I'm looking at a chart, when I pull up a chart and I see a chart forming, I see a pattern forming, I'm going to be thinking about, all right, the stock, let's just say, is moving up, and let's just imagine these are proper full-size candles. We get a little bit of a pullback, and maybe I'm thinking about getting in about here. This is going to be my max loss, the low of the last pullback, and my profit target would be a retest of the high. Now, in this particular case, well, this looks like it's only about, if this is 10 cents, this is about 10 cents, which means this is about a 1-to-1 ratio. A 1-to-1 ratio, well, that's not bad, but if that's the most this stands to give us, I don't know if it's really worth it. Because the fact is, if that's the best case scenario, we don't usually realize best case scenario. Traders are eternally optimistic. We always think something has the potential to do more than it does. So whatever our potential is, the realistic outcome is probably half that. Now, in this particular case, we might say, well, this could actually probably, get back a little higher, or maybe we could set our stop a little bit tighter, but we want to be able to manage our risk based on risk of 1, profit potential of 2. So 2-to-1 profit to loss ratio. Okay, so that's our profit loss ratio. Now, when it comes to the exact entry, I'm of course using candlestick charts. And the chart patterns that I'm going to be most interested in will be the following. Number 1, entries around $half and whole dollars. We often see that stocks behave with a real degree of respect to $half and whole dollars. So we'll just say this is 5, this is going to be approximately 550, this is going to be 6 up here, and then the next one will be 650. It would be very common if we were watching a stock hitting the scanners to see it first squeeze up here to about this level, pull back just for a moment, maybe a little red candle right here, couple red candles, and then punch through. The reason this happens at whole dollars and half dollars is because a lot of traders will place sell orders, a sell order right at this level. They're thinking, oh, well, I'm in the stock, and once it goes up to $5 or $6, I'll just sell at 6. So people just sort of tend to put their orders at half dollars and whole dollars. So that means as we approach those levels, we find that in these areas, there's a lot of orders that are stacked up. So if we actually looked at all of the orders on the order book, we would see that around these areas, lots of orders. And then it kind of thins out, and then it comes back up, and then thins out and comes back up, and then thins out and comes back up. And so for that reason, it's very common to see stocks move very quickly as they approach the next level, and then again, pull back momentarily before making another move higher. Now, if it can break through this area, the next resistance isn't going to be until the next $0.50 and whole dollar. So this is a chart pattern. But if you saw this chart pattern and you weren't thinking about $0.50 and whole dollars, it would be okay because you would still be looking at the same entry. You would be looking at these little pullbacks here. I always like to buy a pullback where I can get in right around down here with a stop at the low. So that's my stop. Yes, my profit target is the high. I would like it to be better than a 2-to-1 ratio, but I always know the potential of this is that it continues higher. So my next profit target is going to be the next $0.50 or whole dollar. So then we get another pullback, which gives another entry opportunity. Stop is at the low. Profit target is squeezed through this $0.50 whole dollar up to the next one. So in this case, that's our risk, and this is our profit potential. This level here up to the next $0.50 or whole dollar. And then we get another pullback. So by better understanding that these stocks trade with this degree of respect around $0.50 and whole dollars, you'll be better equipped to trade this pattern. You'll recognize that, okay, as soon as this stock gets over this level, it may pull back and retest it. Not uncommon. As long as it can hold this firm as support, then this previous level, which was resistance initially, overhead resistance, has now become support. The stock is holding it. I'm going to keep holding my position for the move higher. So entries around $0.50 and whole dollars are often going to correspond with moments of consolidation, where the stock will come up to that level, it'll consolidate for a few minutes, and then it'll break through. And it is as the stock is breaking through that I'm typically going to be buying. So entries around $0.50 and whole dollars is a big entry setup for me. And micro pullbacks. This is also a really popular entry setup. So with a micro pullback, the context is a little bit different. We're seeing a stock that typically has just made a really fast move and has suddenly squeezed up. Typically it's on breaking news. The stock has suddenly squeezed up, 15, 20, 30%. So a micro pullback is going to look more like this. The stock just immediately squeezes up like that. It's a huge green candle. It blows through several levels of resistance. And then, just for a moment, it pulls back, only for a second before surging higher. Now, this right here represents the micro pullback. The way I visualize the micro pullback is when I'm actually watching the level 2, I'll see the stock squeeze up as I'm watching the order flow. I'll see it pause for a moment. And in that moment, a red candle prints. And then as more volume comes in, I'm buying for that next leg up. So before I show you the next entries, let's look at the trades from day 2. So on day 2, we have a stock here that ends up giving us a pretty nice move. All right, so let's get dialed in. This is almost a perfect example of a micro pullback. So APRE is the stock that we're looking at. And this stock is right now up 61%. It's squeezing up. It's got breaking news that came out at 8:30, the bottom of the hour. Now the stock is showing 12.16 on the offer. I press Shift 1 to see how many shares I can afford to buy. And I see that I can afford to buy 399 shares, which is not a huge position, but it's a $12 stock. It's a bit more expensive, and so I figure, okay, this is worth it. Now, if we look at the chart right here, what you'll see is that the stock popped up to a high of about 12.20 and is pulling back just for a moment. So let's watch this level. It's dipping down to 11.83. I put the order at 12.25. It's a marketable limit order, so it is a limit order. This right now is a micro pullback. I see green on the tape right there, and I punch the order. I'm in at $12. See all the green on the tape? So now what I'm looking is for this stock to squeeze through 12.25. Holy smokes, there's $13 on the offer. Did you see that? Did you see that? That is a perfect micro pullback. Now, I've had micro pullbacks like that where the stock has gone up $5 a share. The idea here is that you're buying a stock that is super strong. It has breaking news. The news has just come out, and traders, they don't want to wait very long to jump in this stock that's moving. Now, in this case, I absolutely did the right thing by locking up some of that profit, because this stock, while it could have gone to $14, $15, $16 a share, is now back at about $11.50. One of the risks with trading breaking news is that in these moments, the stock can be very volatile. Nonetheless, I just locked up $329.24, and the account has now doubled in 2 days. When I came in here on day 2, I had $859.20, right? Because I had the 300 plus from the previous day, but fees and commissions came off of that. So I had about $859 of equity, and now I've got $329 of profit. This is a great day for day 2. And that's the only trade that I took. One trade on a micro pullback on breaking news, and that was it. Okay, so on this next trade, I once again do a micro pullback setup. This stock pops up, it hits my scanner, it pauses just for a moment, and I jump in. Let's jump onto the chart and check it out. Okay, so GXAI has hit my scan, and I'm gonna jump in here, as you can see, right at the $0.50. It had popped up, it had pulled back, and I got in at $6.48 using that hotkey of Shift 1. The most shares I could buy was 1,023 shares, so I jumped in without full position, and I am shocked by how quickly this is moving. So I take some profit off the table there as it squeezes from 648 up to 7, and look at how it has resistance at 750. And look at how it has support at the $0.50 or the whole dollar of $7. So now it's breaking over 750, 747. It's kind of struggling right around that $0.50 whole dollar. 725 on the bid, 745 on the offer. And then look at this, 765, 770, next target 8, right? Next logical target here is $8. It goes basically right to 8. There's $8. Next target, $8.50. See how it goes right to $8.50? And this moves fast. Now, $8 is support. $8.50 is the new target. Okay, so when it shows 797 on the bid, I get a little nervous. Like, is this going to hold this level? But so then it drops to 750, the next level of support. Nonetheless, this is a really impressive move. This stock, out of nowhere, has hit the scanners and is up 44%. It just is skyrocketing. Once again, bottom of the hour, 8:30 in this case, the stock hits the scans and starts squeezing up. So news at the bottom of the hour. Our current high right now is around 8:30, and there it is, 8:30. Next target, 8:50, and then 9. All right, so we've got 8:53, 8:35, 8:62. Now the bid is 8:60, so it's holding over 8:50. But again, you can see how it's sort of struggling in this area, sort of rejecting, creating on the chart a little bit of what's called a topping tail. A topping tail is when the stock squeezes up and then sellers push it back down. So it has that upper candle wick, which is indicating that there's a little bit of a struggle. I would say right here it is struggling a little bit, but it's still holding up relatively well. The stock's up 65%. So there's 879 on the offer, 880, 885, some green on the tape, $899, now 950 is next target. All right, if we can hold over 9. We've got to hold over 9. Now, I'm still scaling out of position. I'm still holding 32 shares. I'm not holding a huge position, but I'm still holding a little bit to see how much I can squeeze out of it. There's 830 on the, $9.30, 933, 934, 921. Right now, it's holding over 9. And when it comes back down to 9, it has support, and it holds that level. Now, this stock ends up grinding even higher. It's really impressive. In fact, I left probably, you could say, a lot of money on the table. In this area, although I could have gotten back in, there wasn't an obvious enough micro pullback for me to feel like I could manage my risk adding back to the position. So I had my first trade down there at 650, which was a very logical micro pullback. And then, I could have taken a trade there around 775, but the way it was jumping between 7 and 775 was a little risky. And now it's coming up to 9. So as I'm looking at these candles, I'm like, holy smokes, this thing has just gone from like 550 all the way up to 9. It's up 71%. maybe we are a little extended. And so I take my profit off the table, selling the rest there at $9.14, locking up $896.99 here on day 3. Now, as the day went on day 3, I took a few more trades on GXAI. Not only was I focusing on the micro pullbacks, I started getting dialed in on these proper pullback patterns. So this is the traditional bull flag candlestick chart pattern. This occurs when a stock makes a nice squeeze up and then pulls back, usually for 2 or 3 red candles before pushing higher. This can occur on the 1-minute chart, the 5-minute chart. It can even occur on the daily chart. And I was primarily trading this on the combination of the 1-minute and the 5-minute. As I continued trading the stock as it went higher, it went to 9, to 10, to 11, to 12, to 13, and I ended up locking up about $1,200 of profit in total on day 3. So again, a really big day of growth in the small account, which was really impressive. Coming into day 4, the account has now grown from $514.22 to over $2,000 in equity. Now, remember, because of the broker that I'm using, I have leverage. So this leverage works like this, just as a reminder. I've now got $2,000 of equity times 6 equals up to $12,000 of buying power. Now, it's not going to be available on every single stock, but on the stocks it's available on, I can really start to grow the account very quickly. So coming in here, I see a stock on day 4 that jumps up to the top of our scan. The stock is APM. It's just past 8:30 a.m. Eastern Standard Time, and we don't have very many strong gappers on this particular day. But suddenly, APM is our leading gapper in an instant. I press Shift 1 and I press Enter. I'm in with 2,182 shares using just about the full 95% of my available buying power, just about $12,000, a little more than. So I'm using all of my buying power on this. I'm in it at 6, and my unrealized P&L is negative because I've got a 25-cent spread. I pull up the chart, but what I like about this is that the stock is a recent momentum stock. It's a stock that just a few days ago, just about a week and a half ago, went from less than $2 a share to over $18 in one day. So this is now pulling back, and I'm looking at this as a potential that we've got to bounce here off the low for a move higher. It breaks through 6. It goes up to where? $6.50, half dollar. And in this case, I took it off the table, putting my whole order on the offer at $6.75. It goes up to 7, and it does push a little higher. The reason that I took the profit off the table on this was because I had a moment of fear. I got in the trade on a micro pullback, right? So if we draw this out on the whiteboard, what happened? All right, the stock had squeezed up here to just about $6, and then it was holding. So I pressed the buy button right here. I'm in at 6, but we've got $5.75 on the bid. All right, so now I'm in right here, and I'm like, ooh, I'm seeing the down, nearly $800 on my P&L, and I'm feeling a little scared. Granted, I've had some really good progress in this account, but I'm starting to think, this might have been a mistake. When I feel that moment of this might have been a mistake, I usually switch my focus from this being a big winner to starting to reduce my risk. I realize that I'm in a little too heavy. And so as it breaks through 6, logically, the next spot that it's going to go to is up to where the half dollar of $6.50. So it goes to $6.50. It even pushes through up to $6.75 and close to 7 up here next whole dollar. And I'm thinking, all right, let's take it off the table. I sell. I take my profit here at about $6.75 right there for about 75 cents a share on a 2,000 share position. $1,600 of profit here on day 4. Okay, this is really impressive. So now the account's going from 2,200, something like that, up to 3,000 plus 3,500, 3,600. Okay, this is what I needed. A couple of really good days like this at the beginning of the challenge, because now, again, what are we going to see? I'm going to open the account tomorrow on day 5, and I'm going to see, approximately, well, let's actually pull it up. I now have $3,926.86 in this account. That's, again, after the fees and commissions came out for day 4. Okay, so now I'm about to take my first loss. AISP, it's up only 2.7%. Now, one of the things I mentioned earlier in my stock selection component of the strategy is that it's got to be up 10%. So why am I trading this? Well, it's a little bit of a continuation setup. To be honest, it's not great. I jump in because I think it's going to go higher, but as you can see, it kind of stalls out. So I'm in with 1,000 shares at $10.24. So I'm using over $10,000 of my buying power on this, but it's kind of stalling out here. If you see this pre-market chart, you can see that it hit a high of 11. And so that was what I was thinking it might be able to continue up to that level. And you know what? What I said about this stock is that it's a recent IPO. It's probably going to go higher, but it's going to be on lighter volume. This ended up actually going up to $11, $12, and $13 later in the day, but it was on light volume. It didn't have breaking news that was going to send it. And this was a little bit of a mistake to take this trade. It didn't have news. It wasn't up more than 10%. And so I put a profit target order out there at 10:30 thinking, well, maybe it'll pop up. Sometimes they'll pop up just for a second. You'll get out and you're like, oh, that's great. But I end up canceling the order and bailing and selling on the bid. On this trade, I end up losing about $250, which certainly not the end of the world after the growth I've seen over the last 4 days, but it is nonetheless the first red day of this small account challenge. I think one of the things that I would say is that if this had been day one, I wouldn't have taken this trade. It's a little too expensive at $10. It doesn't have news. It's not up 10%. But once I started to build up a little bit of a cushion, I started reducing my quality threshold just a little bit so I could increase the quantity of trades. By doing that, I exposed myself, as you can see here, to my first loss. So down $248 on this trade. Not the end of the world, but that's a red trade. So now let's look at day 6. So on day 6, I broke the ice with my first trade, buying 1,000 shares of STI, a stock up 94% with 20 million shares of volume. I was looking for a squeeze back to the pre-market high of approximately 350. But as you can see, this trade did not really play nicely. I got in a little too high, thinking it was going to keep extending higher, but then it flushed back down. Fortunately, it's got a pretty nice range, so I guess a little bit forgiving in that regard, able to get out as it comes back up, as you'll see in a moment, but not really certainly the winner I was hoping for. So here we go, back up to 37.38, and I'm actually going to be able to take, let's see, 500 shares. I put the order at 49. I think I was hoping that this would just grind higher, but I ended up giving up on it there, losing $29.48. Okay, not a big loss, not much of a big deal, but 2 red trades in a row, the trade from day 5 and then this first trade on day 6. So I end up switching gears and taking another trade on AISP, locking up $240 of profit as it pushes a little higher. This was, again, continuing higher on the daily chart. So I thought, all right, let's give it a stab. Locked up $240, not a huge trade, but again, making some progress, and I'm in the green. Now on my final trade of the day, WAVD, squeezing up 55, 65, 68%, and I jumped in as it was pushing higher. I was looking for the squeeze over $5. It ends up tapping out right around 504, 507, and I take the profit off the table, locking up here on day 6, $376.53, which now puts the account up over $4,000 for a 600+% return in less than 7 days of trading. This is really solid. If you want to learn more about the strategy that I'm trading every single day, make sure you download my small account strategy PDF. It'll be pinned in the top of the comments. It'll be pinned in the description so you can check it out. You can download it and you can start practicing this strategy on your own. Now, I'm trading every single day. I live broadcast while I'm trading. So all of our members, my students at Warrior Trading, they can watch over my shoulder as I'm navigating the markets. Here's the deal. You guys don't have to do it on your own. So learn my strategy, study up, and if you want to take the leap and become a member of Warrior Trading, we'd love to have you join. And as always, I hope you hit the thumbs up on this video. I hope you subscribe to the channel, and I'll see you for the next upload real soon.